Hello and welcome to the Financial Future Guide. I'm your guy and I'm your guide. My name is Alex, and today we're looking at the economic news that's occurred in Canada over the last week or so. In these short videos, I like to jam pack it with headlines, data, and important macroeconomic information that I think the YouTube community could benefit from. Today is August the 11th, 2020. We like to keep this short and sweet, so let's get right into it. We'll start out with the economic calendar over the last week. We can see that on Friday the 7th, some information came out about employment change and the unemployment rate, so let's start there. The headline for this week is Canada added 419,000 jobs in July, but is still 1.3 million below pre-Roni levels. So the Canadian economy created 419,000 jobs in July of 2020, beating market expectations of 400,000. It was noted that most of the employment gains in July were in part-time work, which increased by 345,000, compared with a much smaller increase of 73,000 in full-time positions. The services producing sector continued to reopen, which accounted for over 80% of these jobs, with an increase in 348,000 positions. This sector is made up of retail, accommodation, and food service professions, which are often in-person jobs that simply do not exist during a lockdown. The remaining jobs were gained in professional and technical services, construction, and manufacturing. Let's go ahead and look at the charts where we can see in March we lost over 1 million jobs, April close to 2 million, and then in May as we started to reopen, we saw jobs come back to life, peaking in June with close to 1 million returning to work, and now the latest results from July. So this obviously had an effect on unemployment. We can see that the unemployment rate in Canada dropped to 10.9% in July, easing further from April's high of 13.7%. Alright, so moving back to the calendar, we can see that housing starts data came out today, so let's take a quick look at that. So if you're unsure about what housing starts are, they're essentially new homes. Investopedia says in a strong economy, people are more likely to purchase new homes. Conversely, people are less likely to buy new homes in a weak economy. This is what makes the new residential construction report, commonly referred to as housing starts, a critical indicator of economic strength. So the article of the week here is new home construction surged in July. New homes being built at an annual pace of 245,604 during the month, well ahead of normal. So taking a look at the charts, we can see that housing starts in Canada surged 15.8% from a month earlier, beating the expectations of 210,000 units. According to Canada Mortgage and Housing Corporation, it was the highest reading since November 2017. This is definitely a great sign. Alright, one more look at the economic calendar. We did get exports and imports data come out last week, so I will take a quick look at this. Exports from Canada increased by 17.1% from a month earlier to 39.7 billion Canadian dollars in June. This was almost 2 billion over the market's expectations. These export sales grew mostly for motor vehicles and parts, passenger cars, and light trucks, which makes sense as the automotive assembly industry returned to work in mid-May. Imports into Canada jumped 21.8% from a month earlier to 42.9 billion Canadian dollars, which also beat market expectations. Again, the purchases of motor vehicles and parts, which mostly came from the US, led to the import increase. A quick look at the Canadian dollar. I'll compare it to the US, where we can see it has been climbing for the last month. I believe this is partly to do with the Canadian dollar finding support as oil prices climb. With the Russia and Saudi Arabia price war, along with the pandemic, the global demand for oil has fallen greatly. This in turn drove down the price of oil. As oil is Canada's largest export, this directly affects the dollar. So looking at the 5-year chart for a barrel of oil, we can see that crude oil usually trades between $50 and $70. However, there is this slight drop to $36.50 in January 2016. But if we come on over to the start of this year, we can see it fell from 54 all the way to 18, and now it's bounced back slightly to 41.80. I like to wrap up this short segment with some of the big headlines coming out of the business world for Canadian and US businesses. First, we can see BCE, which is Bell Canada. Profit falls 70% as Roni Ronas took a bite out of the revenue. Profit slipped to 237 million between April and June, down from 761 million a year earlier. Next up is Timmy's, and if you don't like Tim's, you don't like Canada. And if you don't like ice caps, you don't like me. Sales at Tim Hortons fell 31% during the pandemic. Restaurant Brands International, who owns Tim Hortons, Burger King, etc., saw the pandemic take a big bite out of their earnings last quarter, with sales down 31% year over year despite a rebound during the past month as commuters returned to the roads. Next up must be one of the stories of the week where Instagram launches TikTok copycat, which it is calling Reels. As you may know, Trump gives Microsoft 45 days to land TikTok deal after threatening to ban Chinese-owned video app. There's a lot of talk about this on the YouTube community, so I'm not going to add to it, but I thought it was definitely important to include. Finally, we have Canada Goose. If you've ever wanted to spend over $1,000 on a jacket, this is the place to do it. The company has said that activity was slow in its reopened stores, which raised concern about the demand ahead of the key winter season. Revenue in the first quarter, which ended on June 28th, was $26.1 million, down 63% from a year earlier. Well, there's your news for the week. Remember to like, comment, and subscribe to see videos similar to this one. See you next time.